Good evening and welcome to tonight's edition of Fact Sheet Live on ETV, live on NISIM 95.9, live on NISIM 100.1, and also live on Facebook, Twitter, and Instagram. Our handle is ETV Ghana, and you can follow the conversation with these handles and also send your thoughts to us through these platforms, and we'll gladly read them if they do get to us on the show. My name is Samuel Ishen, and tonight we are focusing our attention on the Ghanaian economy. Yes, the Ghanaian economy, especially after the downgrade by S&P of Ghana's credit rating from B- to C, which has gotten many of us talking as to why we are being downgraded, especially at the time that the Ghanaian government has been giving assurances to the people of Ghana that the Ghanaian economy is going to rebound. And we all know the impact of these credit ratings on the Ghanaian economy, especially when it comes to bolstering the confidence that investors have in our economy. And so, what would a negative or a downward grading of our economy mean for the Ghanaian economy, which hasn't got the fiscal space to borrow, the Ghanaian economy, which hasn't got the fiscal space to breathe, the Ghanaian economy that is so much choked and is looking for a way out of its predicament? On the back of that, just, I believe, over the weekend, if I'm correct, GUTA also wrote a letter, a love letter for that matter, and I'm smiling, to the government. And I'll share with our viewers the heading of that letter, which paints a very gloomy picture for businesses in the country. And we all agree that for an economy to thrive and to blossom, it takes the private sector to allow for that to happen, because we say that they are the engine of growth of every economy. And so GUTA writes a press statement, and the heading is, as a result, it says, businesses bleeding to death. And that's a very scary one. And I'll try to read a summary of what they state in their press release, and then we'll come to our conversation. They say that as a result of the current exchange rate situation in the country, businesses are seriously bleeding to death. Government therefore needs to do something to salvage the situation as soon as possible. We want to call the attention of the government to the fact that the depreciation of the cedi against other major trading currencies is getting out of hand, and the increase in the monetary policy rate is also leading to higher lending rates in the country. Businesses have reached a situation where its survival is seriously threatened if no immediate action is taken by the government to find a solution. By this statement, we are calling on the government as a matter of urgency to reconvene the Foreign Exchange Committee that was set up a few years ago by the Finance Ministry, which involved all relevant stakeholders to help find immediate solution. It could be recalled that since December 2021, when the dollar was 6.4 cedis, our working capitals have been depleted by 40%. Now that the dollar has reached about 9 cedis, our worst fear is that we are now going to make Christmas orders from our suppliers, which may aggravate the situation. Now, back to the issue of the downgrade of Ghana's economy by S&P. The government of Ghana has expressed its surprise at the downgrade of the Ghanaian economy, saying that these are external factors that are, translating into the hardships we are experiencing in the country. And so the expectation would have been that S&P would look at the external factors before it downgrades the economy. These are issues we are focusing our attention on tonight on Fact Sheet, as my experts join me for us to throw more light on the concerns therein and the way forward as the resolution of the problems that we are facing as a country. So that's it for tonight. It's about the economy, and GUTA's concerns. Do stay with us. We'll be right back. And you welcome back to Fact Sheet Live on ETV. Tonight, my guest to help me discuss the issue of the state of the Ghanaian economy, Dr. Joseph Obey, who is the president for GUTA. I would also be joined on the phone line by Mr. Emmanuel Amwat Dakwa, who is a regular guest on the show, and also chartered economist and partner at CCAT Global. And Julius Jima also joined me, who is a financial accountant and a tax analyst as well, also a regular on the show tonight. And so these gentlemen would help us have an understanding and an appreciation of the issues there when it comes to the Ghanaian economy. So, Julius, it's good to have you in the studio. Dr. Joseph Ovin is joining us via Zoom. Doc, good evening and thanks so much for joining us.
Good evening, sir.
I'm hoping you're doing well tonight, sir.
By God's grace, we are okay.
All right, so I would like to start with you, and a very interesting love letter you wrote to the president through the finance minister, where you complain about the state of affairs of Ghanaian businessmen. For the benefit of our viewers and our listeners who would not have had a chance to go through your document, can you summarize what is contained therein for us?
Yeah, thank you very much. If you've noticed how I make my press statements, normally they are very straight to the point. And then maybe some half paragraph I've made my point. But this particular one was just like thesis that I was writing. It was such a long piece for a press statement because of the time that we are in, and that whatever thing that you are doing, you have to be calculative. Because I was thinking that we are talking about foreign exchange, and we are traders and we are importers. And so, for the mere fact that we are importers, it's presumed that we are the cause of the problem regarding the foreign exchange. So I have to take my time to be able to let the good people of Ghana understand that we are not the cause. As a matter of fact, we have good intention to help government, and we also have good intention. The fact that we are traders means that the meaning of trading means selling of goods and services, selling and buying of goods and services with the intention of getting profit. So that is trading. And so trading does not only mean that we do importation. That is the buying aspect of it. The selling aspect of it is the exportation. I hope you understand. So we do export, and then we also import goods. So buy and sell of goods to get profit. But here, I think most of us do more import than the export. Our major problem had been the fact that we do not have a lot of information about exportable commodities, the destinations that we have to send those goods, and also the prices, and then the quality that is required. And just recently, we have seen Export Promotion Authority to discuss on these issues so that they will give us the relevant information so that we can also do exportation to help Mother Ghana. So having come from that background, knowing that people will lambast us, that we are talking about the exchange rate, then I have to take my time and then dissect the issues for people to really understand. That's why you call it a love letter. I appreciate that. But essentially what I was trying to do was to draw government attention to the plight that businesses are facing, not only the trading community, because we are talking about the business in generality, because it affects agriculture, it affects transportation, it affects manufacturing, because the major inputs of that is required to manufacture in Ghana, about 90% are also imported. So it affects all aspects of the economy. And then, having seen that the trend is going on from the end of 2021, December, where the dollar was 6.4, the trend has been going on steadily, and then the cedi has been falling without any stoppage, and to the point that now is 9.1 something. So then we said that if care is not taken, we are also in the Christmas Eve. We are now going to start our Christmas purchases, and so if we do not draw the attention of government, what is going to happen is that we are going to aggravate the situation. By November, the dollar would have gone around 10 cedis per dollar. At that point, I don't know what we will do. But especially before, because speculation has also set in, it means that panic buying is also going to set in as well, because people then will know that the value of the cedi is getting weaker and weaker, and that the only solace is to buy the forest, especially the dollar, and keep it. When that starts happening, then it is going to be difficult for government even to solve the problem, and then the problem is going to be even more murkier. And that's why we drew the government attention. First, we know the situation that we are in, that we are in some sort of a crisis, the IMF thing and all that. We know that coming from the crisis of the world, the Ukraine war, the impact of the COVID and all that. So then we are very measured to say that we are pushing government to do what what may not be there. So then I came from the angle that we have to call on government and to call on the stakeholders meeting so that we can all brainstorm and then find some solution to this major problem, which if we do not take care and manage it, is going to throw our economy out of gear altogether. Because we have the Continental Free Trade Area to contend with, we have the 1D, 1F, we have all these beautiful programs and all that. With the exchange rate alone, it can throw all these things out of gear and we will be out of competition. So, having done that, we also due attention of government to the fact that if we do not take care, some things that some problems that we have in this country that we are not solving will not allow us to be able to solve this problem. And what is it? Because let's say that for the past 3 years, the nation Ghana have been having a balance of trade surplus. It means that 3 years continuously, export overshadows that of import, primarily because of the oil, because oil gives us a lot. And if we get balance of payment surplus and our export overshadows import, then of course our currency should have been strengthened, isn't it? Then we should have gotten a very backbone that will have to give our currency some strength. But that is not to be. And it has been perennial. Every year, beginning of the year, the dollar will go up from end of December, January, and then February, mid-February, it settles. But this particular year, because of the Ukraine war and other factors, the impact of the COVID and all that, it has prolonged up to today that I'm talking about.
All right.
And so I was trying to draw...
Let me chip in a question. You've given us a summary of the entirety of the document you put out there. Since you put it out there, have you received any feedback from government as to the suggestions therein? And when I have the conversation with my guests here with me in the studio as well, we'll come back to the nitty-gritties of the issues raised there. But have you gotten any feedback from government?
Yeah, it is the vice versa, because we've already seen government, because we do not come out just like that to talk. Because most times we give our input. Any budget that is read, we send our input. Government also have some fora that we are fully represented, and we articulate our views also at those platforms. And so it's not that we haven't articulated this, but when we are not getting the results and it's still going on, then we have it as a duty to let the public know what is actually going on, and then also seek the support of the media. Because when the media also start propagating our issues, then of course you know that the results will be fast-tracked. Right. And then our members will also appreciate that, because I must tell you, people are speculating that there's going to be demonstration or shutdown or sorts and all that. Because sometimes we do this to cool down the tempers of our members because of growing agitations in the market. The agitation is so much, then we come out with some press release to let them know that we are not have done this time around. It's not that we have not communicated to government. And so by this, I know is going to fast track on the issues of reconvening the major stakeholders to come around the table to prefer a tangible and workable solutions to government.
All right. Thank you, Mr. Joseph Obin, for the inputs then, for the explanation you've given us. So, Julius, let me come to the studio and pick your thoughts on this. Now, they raise issues about the depreciation of the cedi and its underperformance against other forex. Now, they raise issues about, importation and exportation and the fact that the imbalance is one of the causes of what we experience. And they raise issues again about the monetary policy rates, which recently was stayed around 19%, and its impact on the ability to borrow from the banks and the interest rates for which they have to pay, and how that's directly impacting on their businesses. Is there no solution to the concerns they are raising?
Thank you very much. A very good evening to our cherished viewers. I think Doc raised certain issues that we have to. It's good that he has, set up, explain what GUTA is meant. He also explained what import and then export. And then he asked a very rhetorical question that if in our budget there's always a positive primary surplus, that means that exports are more than imports. Why is it that we are where we are? In the sense that our international, commodities that is expected to bring us foreign cash here means, foreign currencies, gold, cocoa, oil, these three major trading items. And then we are not getting the correlation, impact on our economy all the time our cedi is depreciation. Then it goes back to the basic questions that then the fundamentals are weak. We have this from the vice president, where if the fundamentals are weak, then the exchange rate will expose you. So what clearly or really are the fundamentals that you are supposed to tackle with? And that is what Doc was saying, that then the stakeholders must come to the table. Is it going to be that traditional way of our economy that, we just, government comes in, gets the money that they have, spent and go? Or we are going to really sit down, look at our real sector, look at how we are going to create factories, create jobs, and you expand your economy. When you are doing some of this, it means that you are really tackling the situations on ground.
But is that not what government is doing? The industrialization agenda. We have in the automotive industry, we've had the VW come here. We've had, I believe, Nissan as well. There's another one that recently His Excellency the President, I think they went to launch an assembling plant that is also here. The District 1 factory is also working. Planting for Food and Jobs is also supposed to be working. So these are things that you expect would culminate into the resolution of the problems you're talking about.
Yeah, so like you rightly said, you said these are assembly plants or whatever. All these automobile industries that has been set up in the country, yes, they are not really producing the raw materials here. They bring in the raw materials and assemble, sometimes even the finished goods. So if you are setting up an automotive industry and then you just set up an assembly plant like Toyota, like VW, Nissan, that is Japan Motors or what have you, these people don't go into the manufacturing of the raw materials because we might not even have the tons of aluminiums or what have you that we have to be able to process. So definitely they'll bring in their raw materials from somewhere and come and do the assembly. That process, yes, government is putting some effort, but that particular process do not really expand your economy and that replication effect that to have on your economy by way of creating the jobs, employing more people. You are collecting taxes from these companies. They really come and put the assembly and then they put the things together and then they sell. Unlike maybe Kantanka that he goes into the manufacturing of the raw materials to some extent and then put the things together. So we've not really seen the impact. There are policy initiatives that government is doing to correct some of those things, but we are not feeling the impact on the economy because some of the goods are even brought from outside. And when these goods are coming, that is where still the import and export thing, because they are supposed to import. Toyota will be here and be importing raw materials or parts from its parent company from outside and bring it to the country. They do not manufacture all these things. So that is an import. So the fundamental, challenges of our economy has not been addressed. And that is what we look forward
But
for.
how about one district, one factory?
Yes, one district, one factory. Basically, initially when government came into power and then they said that, oh, they are going to really focus on production instead of taxation, we're expecting the one district, one factory to take off at, the rate at which, or the policy description that they give us was not what we are seeing. For instance, I mean, it takes time for a factory to, the gestation period for a factory. Time went by and then government actually, realized that they are rather putting capital into existing, factories and trying to expand their capacity. Now, when you do that, the factories and those companies are operating at a certain level. They have already employed their staff, their production levels are there, they know their demand and what they can produce. But we were expecting that there are going to be new areas of factories that will churn out so that you go into production, and then when you have surpluses, that is, you'll be able to meet your local demand, then you can export those items. That was the initial policy description that we had, but we haven't seen it like the way government is treating that 1D, 1F, and it is not even providing the jobs that were promised. I mean, government, leaders are talking about the next 2 or 3 years, those initiatives will yield the result. But we are talking about our current situation. As to whether in the next 2 years or 1D, 1F is going to provide those jobs, open our economy, the things that we are supposed to produce here, and for that matter, we are not an importer, is going to address those challenges. We are yet to see them. But at the moment, where we are is what GUTA is trying to hit government, that GUTA is not all about import, import, import. Some of them also do export. And you can only do export when you are meeting your local demand. First of all, the agencies that are responsible for, production is the AGI. So I wouldn't be surprised when AGI will come up and respond to GUTA's, because there has always been that friction between AGI and then GUTA. So as to whether at the moment, Doc is calling for stakeholder consultation, because once we are going to Christmas, then demand will peak. When demand peaks, it is very cheaper to get goods outside, maybe from China or US or Canada. So these importers are, like Doc said, they are trading to make profit. They will not look at producing locally where the factors of production are high. Access to raw materials, access to labor, and then even your overheads. You are producing at a rate where most of your profit will be absorbed by your overheads. They wouldn't do that. So they will look at how much price they are getting from overseas, if they can negotiate with their suppliers from outside, maybe say China, and then they are going to get it at a lower cost. They will rather import it and then bring it to the country, add a certain margin or markup to it, and sell to us.
Now, there's a very intriguing element in the entire conversation that GUTA brings up. GUTA raises a very legitimate concern about the staying of the monetary policy rate at 19%. And their concern is that the government stays it at around 19%. What it means is that they are going to be borrowing from the banks at higher interest rates, and that impacts on their capacity to borrow and then to also trade for the government to get the taxes it's looking for. But the government also put in these policy rates to ensure that it controls the inflationary figures that we are all crying about, which in the end also translates into the capacity of the businessman to purchase. So then, it's a case of the chicken and then the egg. Which comes first?
Very interesting, a symbiotic relationship in that regard. You see, as for the businessman, he's looking at, cheaper access to capital, because the businessman is not a Father Christmas. So they would always want to have access to capital at a cheaper rate. Now, if government stays the monetary policy rate at the 19, hoping to control the inflationary pressures on our, our city, and as a result, the depreciation of it, the business, you are also looking at the people who are controlling your economy, who are making sure that they are supplying goods and services to your economy. And they are also looking at how they will get easy access to financing options and at a cheaper rate. So if you up your interest rate a little bit, and then they cannot go and then purchase finance or capital from our local banks, because the banks also is going to at least add something to it to, also make some profit, then it means that the indirect cost of, assessing capital will also going to be passed on to the final consumer, and that destroys your fundamental of your your economy. So all the time there is that symbiotic relationship where the businessman is looking at the loophole to make money. So we hope that yes, government wants to control the city depreciation, government wants to control inflation, but it's clearly really staying that monetary policy rate at that rate going to solve our situation at this particular time. Mind you, Doc is hinting about Christmas that is coming, and all importers are looking for ways to import. They have to when their turnover levels are low, they should be able to reorder, bring in new goods, and they want to hit government that look, if you continue to increase, we cannot go for maybe overdraft from our bankers and then pay off within the next month or 3 months, turn it over and bring in new goods to supply. The issue is that are we meeting local demands as against what we are even producing? And that is where the debate and then the battle is. So we hope that, yes, staying it to control inflation, it is not only that. We know where the inflation, there's import inflations, and looking at the challenges the economy has faced from COVID to, currently Russia invasion in Ukraine. There are other global factors that is putting pressure on our currency. So yes, in doing that, you should also make sure that you do not, limit the businessman access to capital. The bank should be open. The bank should be, a friend to the businessman where they can go discuss their business directive, policies, activities with them, and then the business should be able to give them what? That finance. But at the moment, there is no confidence in the economy because of the things that we are seeing. The banks too are also afraid. They are not ready to give the monies out because they know that when they give the money out, the businessman will be able to sell, make the turnover, and then even pay back. That is also another area that, so the risk is interconnected.
Let me quickly jump to the phone line and speak to Ima, so that we would look at the angle of the credit rating position of our country, where S&P downgraded us from B minus to C, and what the implications are. The Ministry of Finance responded, and their reaction was that of disappointment. And let me read just a bit of it to our viewers before we jump on the phone line. They say that the government is disappointed by S&P's decision to downgrade Ghana despite the bold policies implemented in 2022 to address macro fiscal challenges and debt sustainability, which have been significantly exacerbated by the impact of these global external shocks on the economy. It stated the government has implemented key revenue and expenditure measures, including a 30% cut in discretionary expenditures. The delays in the passage of key revenue measures introduced in the 2022 budget affected revenues performance in the first half of the year. Ima, the response from the Ministry of Finance on the credit rating position of our country, justifiable?
To our viewers, to some extent it's justified because of what government has done in the past 6 months. You remember that at the beginning of the year, government had to implement or bring into its budget some revenue lines which did not materialize. Key of them was the e-levy, and then
Ima, we seem to be losing you a bit. If you could just reposition yourself so that we can hear you.
Is the line okay?
Yeah, I think it's better now.
Okay. So as I was saying, because of the revenue lines put in the 2022 original budget, which was presented in November 2021, some of these revenue lines have not performed, and it even took time for some of them to perform or to be accepted by Parliament. Key of them is the revenue from e-levy. At the time, the revenue projection was to raise about close to 7 billion, but even up until May 2022, when that bill was assented into a law. Again, the tax exemption bill was just recently passed, which is also supposed to make some revenues for government. And also, fees and charges in the 2022 budget was increased by 15%. It was just up until the end of last month that bill was also passed into law. Government has also tried to renegotiate the IPP deals, which has saved us close to about 13.2 billion. So government has been doing a couple of things for us to get into the desired fiscal consolidation mode, which is going to take time. So I think I side with the ministry's press conference stating that it is unfair. And we also know that the external shocks are also very rare, very also ripe. You talk about the external shocks from Russia-Ukraine war, which has led to fuel, financial access, and also energy prices going up. These are things that are external shocks that is affecting not only Ghana's economy, but economies globally. So I believe that it is unfortunate that this downgrade is coming at a time that government is also finding it very difficult to even go onto the international capital market to borrow. And it's also going to make our Eurobonds trade expensive on the international capital market. And as the 2022 budget mid-year review posited, interest rate or interest payment has been increased from 37 billion to 41 billion. And with this downgrade, it is going to worsen our external position in terms of our debt amortization and the cost we pay on our interest payments. So I side with the ministry on this, even though for half-year figures, we have met some target, but government has been able to put together, some policies to get us to, that desired fiscal deficit target. And so I side with the ministry's, press statement.
It's interesting that you side with government, because if you take a look at the government's own IMF article for consultations which they had, the IMF had indicated that we were a high-risk country in terms of our ability to service our debt portfolio, in terms of our indebtedness to some of our partners, investment partners that we are having businesses with, in terms of the issuance of bonds and other. And so this was known already, even before we got here.
Yeah, Ghana is a high distress country, we know already, but what has government done to solve the problem? Now, the big question we have to ask ourselves, why do governments borrow? They borrow because the expenditure is higher than the revenue. And as I have mentioned in my earlier submission, let me quote some half-year figures to put the conversation in context.
Okay.
By the half year, we projected to raise revenue of about 43 billion, but we were able to realize 37 billion. At the same time, expenditure, we estimated to spend about 36 billion, but we exceeded it to about 65 billion. Fiscal deficit for the same period was estimated at 19.7 billion, but we ended up spending 27.1 billion. Our budget deficit to GDP was, we estimated 3.9%, but we ended up at 5.6%. So the big question, what is government doing to get the figures right? And as I have mentioned, government has taken some bold initiatives and even passed some laws to get revenues going up and at the same time contain expenditures to a larger extent. And so if these downgrades are coming in, it makes it very difficult, and government will also have to even increase interest payments on our debt. We have earmarked 37 billion in the original budget, but had to increase it to about 41 billion, not necessarily because of fresh debt, but also foreign currency depreciation. And now that there is a downgrade, it means that government is also going to have to
but
a lot of money.
Whose responsibility is it to ensure that the currency doesn't depreciate against other currencies? It's the Bank of Ghana's responsibility, and they are part of the government. And so, should we blame who? I mean, it should be the government.
It comes from two sides. In management of the economy, the fiscal side and the monetary side. What has the Bank of Ghana done over the years? Well, the Bank of Ghana keep receipt of all the export revenues we are making. And I must say that our export sector is not doing that bad. Gold, cocoa, and oil prices in the half year have been doing quite well, especially crude oil. We are even making in excess of some windfalls, which is going to even cushion Ghana's budget, and hence government is not even requesting for supplementary estimate. But on the fiscal side, what is government doing to contain expenditure, at the same time raise a lot of revenue? And as I have mentioned, these are revenue measures that have just kicked in, and we expect it to perform so that government will be able to get onto the desired fiscal consolidation. And I think for me, I must say that in this time, it is quite unfortunate for this downgrade because it's going to make government is going to have to cough a lot of money to even amortize its debt. And if you look at the tight fiscal space we have, the three expenditure items consuming your whole revenue, and one of these items going up. We have government had to accept to pay COLA, and now interest rate is going up, and this downgrade is also going to further worsen our ability to amortize our debts. I think it is quite unfortunate that this downgrading is coming at this time, but government has to.
But at some point, you want to cry about the impact of the Ukraine-Russian war. But you
Yes.
agree with me that the windfall in the petroleum sector, in the oil sector, is also one that government is benefiting, raking in lots and lots of money for the government. And so, if at some point the same thing is causing you damage at some end, we should be, frank enough to admit that, yes, at some point it's wounding us, but at some point as well it's making us smile. And again, why would we want to blame Standard & Poor's if they talk about the real situation of the Ghanaian economy, seeing, for instance, the government's projection that the e-levy was going to rake in a certain amount, and it's not been able to achieve that?
Yeah.
Is S&P wrong to say that based upon the government's inability to achieve its revenue target with the expectation that it was having with respect to the e-levy, we estimate that, look, it would not be able to pay people it owes?
Well, I get your point, but what has government done to resolve this challenge? And one of the options is for the government to go for a funded program, and government has started negotiations. And so I should have thought that, these downgrades should have, it's not at this point in time. Government has shown commitment to, get the books right. In terms of even discretionary finance, the government is cutting it by 30%. I think these are measures that we have to also give government, the credit for it. We know there is an existing problem. How is government resolving it? And so we have to acknowledge that government has done something right to solve these problems. So these, downgrade by S&P, I think is quite unfortunate. And it's not only in Ghana, but other, emerging markets. And this is the time that emerging markets should start having conversations about these credit ratings, because what it does is that once your credit rating is downgraded, it makes your amortization of your debt also very expensive. And who are the people investing in your economy? These are foreign, businesses and investors. So at the end of the day, the cost of interest that you are paying, the beneficiaries are not even from emerging market, but from advanced economies. And that is why I think as a continent, as emerging market, we should be having deliberate conversations about it, because the whole global financial architecture, it looks to me as if it is arranged to disenfranchise and to negatively affect emerging and developing countries. And I think this is about time we should be able to talk about these things. There are external shocks. Even if you go to Europe, if you go to America, if you go to Asia, they are facing these challenges. Go to America and see inflation rate. Go to UK and see the inflation rate. Record highs. So why is it that in developing countries, these downgrades are coming up? And if you look at Ghana's external position, our reserves are depleting. And which is also, and investors who are investing in our domestic currencies are also, they want to also get out of the market. So it's putting a lot of pressure on our currency. Hence, dollar is hitting about 9 cedis to a dollar. It is unfortunate. And so I believe that we have to also have a bigger conversation about credit ratings and its impact on our, our cost of interest.
Well, we will go for a short breather. When we come back, interesting conversation we are having tonight, because you seem not to have a real solution to the problem. But I'm sure within the next 10 minutes, we should be able to come to a consensus as to what next government can do from the perspective of GUTA and from my financial aspect with me. We'll be right back. Welcome back. The conversation has been one very interesting one. Because my panelists, especially the financial folks, have divergent views on some of the issues we are raising. But let me quickly dash to Dr. Obey, and within 2 minutes, take some comments from him as to the views expressed by my other panelists, and then I'll jump back to the studio. Doc, so you've been listening to the aspects in the issues of the economy and finance. Does it in any way give you some relief as to the speedy resolution of your concerns in that love letter you sent to government?
From the contributions that we've received from various panels, as I've monitored, all seem to be in support of our statement. And so it gives me definitely relief. I have confidence, a great deal of confidence in this, our experts and our economists and all that. At least this time we are all talking together. That's the more reason why I was calling on government to assemble such brains together. You know, sometimes when a crisis of this nature happens, we swallow our ego and then fall on our own citizens. If you fall on your own citizens, you haven't done anything that is disgraceful. You know, at Amel's, our president, former president, His Excellency, conveyed us all to Senche to brainstorm on the similar situation. And that's why I think we should also do same, assemble these young, brainy, young intellectuals to bring solution. It's Ghanaians that will have to solve our own problem and nobody else.
Doc, I'll thank you for your views tonight. Let me just, Julius, wrap up comments, 2 minutes, because you seem to have a divergent view, contrasting view of some of the expressions that Ima, was given.
Yeah, so what I'll just wrap up with the S&P ratings on our economy is that, sometimes these international ratings agencies have been working for some time now. And when they do this work for us, government should take it in good faith. As to whether we have to have a conversation on, the work they do will be for another discussion. But the point is that they should see it as, somebody actually checking or validating the work that you are doing in your country. And it is all in the betterment of the citizenry to make sure that life is easier, cost of living is cheaper, we can live in our country and prosper. That is the most important thing. I don't think that, they are politically induced or what have you to be able to come out with this rating, which is CCC plus C, putting Ghana's economy in a speculative mood where people or investors cannot actually bring in their money. Anytime they want to bring their money to their countries, like they're a bit careful, they don't want to do it. Can I bring my money to Ghana? Can I bring some $60 million or by way of a project into, no, if I bring it, will I get my money back? These are the speculative mode. And it all comes down to the fundamental problems of our economy. We've been talking about it time and immemorial. So it's high time when these reports come out or when these ratings come up, yes, there should be a desk at the Ministry of Finance to really look at, the discussions and the suggestions that they are giving on board and then take it in good faith and then find a way to look at the positive in it and then apply it in the implementation of their fiscal policies and then monetary policies as well. We hope that when they do that in good faith, in the end, Ghana will win, our economy will bounce back, prosper, and then we'll be able to live in peace.
Well, Ima, let me take the wrap-up comments from you because I have also been smiling at your position tonight, on the show. Wrap-up comments, Ima.
Well, the wrap-up comment will be immediately we should cut down on commercial loans and look for alternative concessional loans because we need them at this point in time. And I think that's going to be my first comment. You see, also on the depreciation of the CB. I think the Bank of Ghana has the mandate to control how, the price stability. But you see, there is a policy about those who deal in Forex Bureau and those who deal in the black market. I think if you don't pay attention to those guys, the amount of dollars they control, just by speculation and by their actions, can lead to depreciation of the currency. And we have seen it time and time and again. And I have worked in a bank before. And I can tell you on authority that even at the time of in the bank, a banker could call someone who is in the black market to bring some huge sums of foreign exchange. And so I think we should look at that the regulation very well so that we know the amount or the volumes of foreign currency in in our country, and how to also control the level of depreciations we
Too bad, but
experience.
our time is. But there's a question that we might have to carry. Okay, Doc, you wanted to make a point.
Yeah, yes, please. In support of what my brother Imad just said, to tell the truth, most of the problem with the black market is as a result of the stringent requirements, that documentary requirement that Bank of Ghana have been given to the banks to seek from us. That have let so many people go underground and deal with this black market. If they relax on their documentation, and then because sometimes they can simplify it, that all that they need is the proof that you have made some business transaction outside and that you are transferring money. But those hudious demands that they seek, it makes it so monstrous that people do not want to work with the mainstream banks, and it does not help the Bank of Ghana to know the volume of business that we actually do. Most of the time, the volume that they give is speculative, because more than half is going underground and going through this black market. But if we are able to relax the documentation and make it so basic, maybe a bill of lading and packing list and all that, and then people go through the mainstream bank, they will then have knowledge of the volume of trade that we do, and then we would have taken advantage to streamline the activities of these bureaus. If you do that, but if we still do the traditional ways of doing things, that has not helped us. Stringent requirement of document that is not helping people to do the right thing. It's not helping us. We should also think about that. And that's the contribution I wanted to make.
I'll thank you, Doc, for that input. Very, very legitimate, point you raise in there. And on that note, I'd like to thank you, Julius, for joining me. Unfortunately, our time is fast spent, but in the days ahead of us, we're going to have opportunity to, for instance, continue such conversations within, just a few days, and then we can make sense of the issues. But I would like to thank you, the viewer, as well, for being a part of the conversation this evening. And thank you, Dr. Joseph Obey, for joining me. My brother, Emmanuel Amadakwa, also for joining me tonight on Fact Sheet. Ima, tonight you got me smiling because of your position on the S&P. And I think Julius has also been smiling in the studio about your position on the S&P and their downgrade of the Ghanaian economy. On behalf of the technical team, Kwame Dante and Sifa Dankwa, Amos as well, and then Jubert, we'll thank you for being a part of the production tonight. Do have a blessed evening.